Hey Bitcoiners, Lachie here from Edge 21. Today we're breaking down the story behind Bitcoin's latest price movement. If you're a Bitcoin enthusiast, investor, or just curious, stay tuned. We'll explain why Bitcoin's price surged past 105k and then back to 103k, a move that's caught the attention of global markets. Let's dive into what's really driving these swings and what it means for you. Let's start with the headline. Bitcoin is hovering around $103,000. But beneath this lies a much bigger story about global economics, investor psychology, and what could come next for Bitcoin. The recent action in Bitcoin's price is closely tied to a major geopolitical event, the US and China's agreement to temporarily reduce tariffs on each other's goods. Over the weekend, both countries announced they would slash tariffs for 90 days, the US dropping from a sky-high 145% down to 30%, and China cutting its own from 125% to just 10%. This surprise deal was a breath of fresh air for global markets, easing fears of a trade war that had been weighing on risk assets like Bitcoin. So what happened next? Almost immediately after the announcement, Bitcoin broke out. We saw it surge past $105,700, its highest level in over 3 months. Investors were betting that easing trade tensions would boost risk appetite, and Bitcoin, often seen as a high beta asset, was a clear beneficiary. But this rally didn't last. As the dust settled, investors began to reassess. Traditional stock markets, especially in the US, took the spotlight. The S&P 500 futures jumped 2.8% on the news, while gold, a classic safe haven, dropped 2.3%. Money flowed out of Bitcoin and into equities, leading to a quick reversal in the Bitcoin market. Bitcoin gave back its gains, slipping back to just above $103,500. Why did Bitcoin lose steam so quickly? Part of the answer lies in profit taking. After a 24% rally over the last 30 days, many investors saw the tariff news as a perfect moment to lock in profits, especially with Bitcoin hovering near all-time highs. The heat map from Check on Chain shows a dense cluster of realized value in the $85,000 to $100,000 range, meaning recent buyers were quick to cash out as the price spiked. Our next graph from Check on Chain shows that realized profits have climbed to $1 billion per day, but this is still well below the $3 billion peaks seen at previous cycle tops. This suggests that while some profit taking is happening, the market isn't overheating. In fact, the short-term holder SOPR, an indicator of how much profit recent buyers are taking, remains positive, but not extreme. In plain English, investors are being cautious, not greedy. Another key factor, leverage. The futures liquidation chart from Check on Chain reveals a recent short squeeze as Bitcoin broke resistance, but now long leverage is building. Funding rates have moved higher, signaling that bullish bets are stacking up. This could mean more volatility ahead as the market digests both the macro news and its own internal momentum. So what about the technical picture? The charts show Bitcoin is consolidating above 100k, with strong support from buyers who entered during the recent dip. The market structure remains bullish, but we're not seeing the kind of speculative frenzy that often precedes major corrections. And here's something for the chart watchers. Bitcoin has broken out of a classic bull flag pattern on the weekly chart. Analysts say this setup could point to a potential move toward $150,000 if momentum continues. The relative strength index, or RSI, is above 65, showing renewed buying pressure but not yet signaling overbought conditions. So what's the bottom line for Bitcoin's short-term trend? The recent price dip is less about weakness and more about shifting investor sentiment. The US-China tariff truce sparked a global risk-on rally, but as stocks took center stage, Bitcoin paused for breath. The fundamentals remain strong. ETF inflows are robust, technical patterns are bullish, and most long-term holders are staying put. But with profit taking and leverage rising, expect more choppy action in the days ahead. Well, that's a wrap on today's Edge 21 Bitcoin price analysis. Drop your questions or predictions in the comments. We want to hear your take on where Bitcoin is headed next. Remember, at Edge 21, we're here to keep you ahead of the curve with personalized, noise-free content, from trending articles and videos to real-time price alerts and expert summaries. If you found this breakdown helpful, hit that like, subscribe, and turn on your notifications so you never miss an update. Thanks for watching, and as always, stay strong and hodl on.